Investors and traders, welcome to the channel Market Chart Pattern. Today is 4th of October 2023, and in this video segment we will be taking a look at the key US stock indices. Before we begin to take a look at the stock indices, this video is for educational purposes only and it is not a financial advice. So before we begin to take a look at the stock indices, let's actually take a look at the bond futures and the bond futures market. So we'll start by taking a look at the 30-year US bond futures chart. This is a long bond future because it's 30 years duration, pretty long. And this is where the action has been that the treasuries, they keep on getting sold, which means that in bonds, when the price moves lower, the yields move higher. So that's why we have also seen pressure come in the stock market as well, and other markets as well, such as the currency markets, in terms of dollar getting stronger. Now this is the chart from when we did the video last time, and we were looking at this 113 level as a very key level where we could expect strong support to come in. And for a couple of days it did look like maybe this level could hold, but it did not. And what transpired is that market moved lower. Now the key thing is just moving off to the weekly chart. So the market did move lower because on the weekly chart we have a key level of 78.6% Fibonacci retracement coming in from the lows going back quite a while, beginning of 2000, the year 2000. So this is just going back good 23 years. That proved to be a level that we should be watching. So the week is not over, but if we just get back to the daily chart, what we can see is we have a positive day today. And if you were watching the bonds intraday, you would have seen there was a tremendous amount of volatility in this market. It's a pretty large market. The debt markets and the bond markets, they're much bigger than the equity indices, or really big players come into these markets. And it was just constantly moving, and of course we had the private payrolls data come in a little bit softer, which may give rise to the expectations that the Federal Reserve might not raise interest rates, or in fact they might be done raising interest rates, and that could perhaps give at least a relief rally in the bonds, and the stocks will also benefit because of no further rate hikes, or in fact staying lower. And then maybe it'll become a question of whether if the inflation is coming down, whether the interest rates could begin to move lower, but that's a bit further away. And also we have the non-farm payroll data coming out this Friday. So the price action between Thursday and Friday, especially Friday, because of non-farm payroll, is really important. But this is the key, that on the weekly level, the 78.6% Fibonacci retracement, we need to keep on watching this level really carefully for the bond futures, the 30-year, and there's still a possibility it could move a little bit lower to 107, but this weekly 78.6% Fibonacci retracement might in fact hold. We'll of course find out at the end of the week. Let's also quickly take a look at the ZN. This is Treasury note. This is the 10-year duration. This market is even bigger than the 30-year bond futures market. And what we can also see is here a positive day today, pretty big range in terms of intraday moves, and we have had similar kind of moves here. So if this whether this is gonna be a pretty good bottom or not, we'll have to wait and see. But in terms of the market symmetry, This is what we have seen where previous rallies have, when the market has rallied to these levels, and the rallies just faded. So if this rally begins to take out these symmetric levels, then we have a much then we could be looking at a rally in this market in the bond futures for 30-year and also for the 10-year, which could last for quite a while, quite a few months, in fact, and maybe moving into next year. But for us, the key test will be this market symmetry. And also, let's draw our 38.2% Fibonacci retracement. So we have this 110 level. So we are watching this 110 level really, really carefully. Here, just let me put it like this in the 10-year treasury notes. So the first indication will come if this symmetric pattern is broken to the upside, and then if the market also begins to take out this 110 level, then that, there is chances that we could have a pretty good rally at our hands, which could last a few months. That's what we are looking at. We do have some lower price targets as well, but because of the 78.6% Fibonacci retracement coming in on the 30-year bond futures, so we need to watch that level really, really carefully. Moving back to the S&P 500, this is the daily chart of the cash index S&P 500. We had been watching this ABCD pattern formation for quite a while now. In fact, when this happened end of July, we identified this pattern. And the other pattern that we were watching for was for this one-to-one price projection ABCD, and price moving into this 38.2% Fibonacci retracement around the 4182 level. So the price, in fact, did come very close to the price level that we have been watching for. It didn't exactly make it. But today is a good price action in the sense that the market actually rejected lower price and closed on the positive. So we have a white candle, a bullish candle formation. Now we need to keep on watching, as we know that Friday we have the non-farm payroll. There's a possibility the price could actually hit these levels of 4182 that we have been watching for, but the price did move close enough. The low has been 4220. It's still about 40 points away, which is quite a bit, but we have two more trading days to go in the week, and the key data coming out on Friday, so we'll have to wait and watch and see. Now the interesting thing is that the real good bottoms form when there is a retest and the price rejects lower price and move higher. So we'll have to really look at some key pattern formation as well around these levels. Now this is the level we have been watching for. Nice trend line, good amount of support coming in here. Whether it's gonna be a pretty good bottom which lasts for a few months remains to be seen, but we are watching this really carefully. Let's move on to NQs. So this is the chart, a daily chart of the NASDAQ 100 futures. So much like the S&P 500, the price level that we had been watching for, the pattern formation that we had been watching for this one was around 14,350. The market has kind of traded near that level, but still quite far away. Excuse me. So about a couple of 100 points away. Still, we have the non-farm payroll come in. Excuse me, a little bit of throat issues. Excuse me. That's why I was not able to make a video, because I was a little bit sick. So I'll try to do it really quickly. So this is what we are watching for. Maybe price might get there, but the NQs were very strong, pretty strong, especially compared to the S&P 500 futures. The NQ futures were stronger today. Let's take a look at the Russell 2000. So we have to look at this one on a weekly basis. Here we go. It's just testing the lower end of the range after testing the upper range, and it's just retraced 50% of the lows from 2020 to highs in November 2021, just moving in a sideways range. So this is what we are watching in the key US stock indices. Do you please do excuse me for this video. I had to drink a little bit of water. um, it's been under the weather a little bit, therefore lack of videos as well. um, but I'll try to make another video soon about the key US tech stocks that we follow. I do apologize for the delay. So thank you for watching the video. Good luck and good trading. Speak to you guys soon. Bye.